So since late 2022, I would say that we're in a high interest rate market. I would define a higher interest rate market as somewhere around 7%, give or take. Over the past 2 years, we've been consolidating in that area. Eventually, that will change. We are seeing signs of cracking in that interest rate market now. We're hoping that that continues, and maybe going into 2025, we see rates come down. Even if they come down 0.5%, 1% from where they're at, it'll give relief to homeowners. It'll increase affordability of buyers coming into the market as well. So we're all looking forward to the potential decrease in rates going into the end of this year and early next year. The attributes of buyers in a higher rate market, I would say in general, there's less first-time home buyers in a higher interest rate market. So the higher interest rate market leads to higher mortgage payments, less affordability. The other issue that we're contending with in this high interest rate market is that we're also dealing with high inflation. So not only is your mortgage payment going to be higher, the cost of groceries are higher, gas prices are higher, insurance premiums are higher, auto payments are higher. There's not one thing that's really hurting homeowners or potential homeowners. It's really the culmination of all of these things being high at the same time. That's why I say in this market, you have less first-time home buyers and you would have more buy-up buyers right now. We do always try to accommodate first-time home buyers in this market. It's a little bit more difficult to do when rates are as high as they are. So as a buyer in today's real estate market with rates where they're at, you have to have a macro picture when you're getting into a house. And what I mean by that is that obviously rates are high right now. With inflation as well, the cost of your energy bill is high, your gas bills, your food bill, everything's higher right now. So buyers that are jumping into home ownership in this market generally have a better understanding or awareness that we're just in a high interest rate market at this time, but that will eventually change. So they're buying now and weathering the storm, so to speak, until rates come down and then things become more affordable to them. Other people that are buying in this market would be people that are buying out of necessity. They're also contending with higher rent prices. So in some markets, owning is as affordable, if not more affordable, than renting. So these people are buying out of necessity, whether their family is growing or whatever the specific situation is. You have more people that are buying out of necessity when rates are this high. So overall, buyers in today's market are going to have more of a long-term view, understanding that rates will eventually come down and then their affordability will improve at that point. Or they're buying out of necessity. They have outgrown their place. They need to move for work. Necessity is driving a lot of those decisions right now. The casual buyers, the people that are interested, that are on the fence about getting into their first property or are somewhat uncertain or can make things work for the time being, are leaning towards sitting on the sidelines until they see rates come down and things stabilized a bit. So what are the attributes of a seller in this market? Well, it's a really good question. There aren't any sellers in this market. There's legit no friggin' sellers. One of the biggest issues that we have in today's real estate market is the lack of inventory. People are leaning towards staying in their homes longer and making things work. So people that own homes and maybe their family is expanding, they have, over the past 3 years, built a lot of equity. And what I'm seeing is people opting to stay. They're tapping into that equity and building an addition, the extra bedroom, the extra living space. That, in their eyes, is more affordable than the cost of selling and moving up to their next home. So it's a unique market in that regard. The people that we see selling the most are people that are moving on from their family life and into retirement and downsizing. I would say that's the number one mover that we're seeing. Second to that would be move up buyers. So buyers that are selling cashing in on the equity that they have, and then going and purchasing their next home. But overall, difficult market for buyers because sellers are staying longer and the inventory is near historic lows. We'll see what happens with that. Not sure how that's going to change in the near future here. So as real estate professionals and lenders, what can we be doing to grow in this market? You know, number one, I've been doing this for close to 20 years. I've been through the financial crash in 07, 08, and then rebuilding out of that in 09 and 10 with a ton of regulation change, incredibly difficult market, different but extremely difficult. And there were people, myself included, that found a lot of success through those years. And I think the key is during the difficult times, people tend to have less going on and they become a little bit removed from the process. And I think in markets like this, the opposite has to happen. I think you need to be completely dialed in. You need to be disciplined. You need to be consistent. You have to pair that with your technology, make sure your technology is functioning, and following up and doing it more consistent and over an extended period of time. The obvious, you need to have a great process. You need to do a very thorough job as a loan officer on the front end, taking a complete application. Your processor has to make sure all of their tasks are complete, timely, for it to be a successful transaction. Everybody in the transaction needs to be dialed in and focused at all times. It sounds crazy to even say that, but with the market slowing down, a lot of companies have laid off. They're doing more with less people. I don't necessarily know that that piece is the issue as much as it is, I think people become distracted when things are slower, when the money isn't coming in like it used to. There's a million other things that we can look at and become distracted by. And I think the most important thing for our clients in this market and to grow is to make sure that we're completely dialed in, consistent, disciplined, and doing all of the little things for success.